Hello everyone and welcome to my daily report market analysis videos with me, Richard, pre-market analyst at Hantec on Monday the 15th of June. There has been a bit of a shift, and I say a bit, it's probably more considerable than that, in terms of market sentiment to the negative side. The fears last week were that there was second wave infection rates starting to pick up in the United States, and that's one thing. But then obviously over the weekend we've seen news out of China that suggested that they are finding second rate infection rates coming up as well. Now Beijing are starting to get COVID-19 infections once again, and that has sent markets in a little bit of a tailspin this morning. Moves, broadly speaking, into safe haven plays. You've seen the dollar, which has picked up actually, broadly speaking, slightly sort of cautious there against the euro, but generally speaking it is stronger against all the commodity currencies. And we're seeing that safe haven plays, broadly speaking, are outperforming. We've got treasury yields which are slightly lower than they were closing on Friday, although they're actually a little bit off the lows of the day as markets have just stabilised a slight amount this morning. Broadly speaking, these treasury yields falling away are sort of negative for risk appetite generally. You can see that through US futures, equities falling away. It's the question mark as to what it actually means. Will China have to start to reimpose lockdown measures? That would be the fear in the worst case scenario, and obviously that would be the potential for then the need to do that in other countries as well. So really is an important time here for how markets start to respond to the news flow surrounding this story, and I think it's going to be an important one in the coming days. Now at the moment we've seen, well, equity markets, to be unfair, they're not as bad as they were when they first opened. European markets were sort of 2.5–3% down on futures around their handover, and they're now sort of less than half of that sort of weighed down. So it's been a little bit of a stabilisation, but not a great deal. It's interesting that we've seen the oil price, which has started to fall over actually in recent days. It's been sort of starting to track lower in more of a corrective move, and that is certainly a concern for how the demand story for the global economy can perform in the coming months if, say, for example, China and maybe even the US have to reinstate lockdown measures. So there are question marks surrounding that oil price and how the fact that it's now rolling over. Generally speaking, commodities are sort of negative. I think you've got the dollar strength of today, which is playing out throughout major pairs really, certainly the Aussie and the Kiwi. And as I said, the safe havens are in favour today. Now, in terms of data points today, I'm not entirely sure whether they're going to make much of a difference, but we've got the New York Fed Empire State Manufacturing data at 1:30. But this morning, what we have had was the China data for retail sales, industrial production, and fixed asset investment, all of which were above the April data. They all came in positively above those, but they missed estimates, and that sort of played again into how the markets have responded today. But later on this morning, this afternoon, we're looking out for the US New York Fed manufacturing data, improving expectation to minus 27.5. Again, that will be important to see how that data does go, because obviously we're looking out for how the US comes out of lockdown at the moment. And the New York Fed manufacturing data, well, it was the worst reading of all the ones that we follow, so it needs to pick up. And if it's better than expected, we could start to see Dallas, Kansas City, Richmond also coming in probably better than expected. So that would be encouraging if that were to be the case. But that's this afternoon at 1:30. So in terms of my chart of the day, we're looking at dollar Swiss. Now, I've noticed that dollar Swiss has performed a bit of a dollar rally turnaround. This is called a morning star candlestick setup, where you have a strong bear candle, solid body, and then a doji candle. I mean, it's got a bit of a long tail, but still a doji. on Thursday, and then a strong bull candle to finish on Friday. So 3 candlestick setup, which suggests a rally is in order, and we can see that starting to come through on momentum indicators, starting to pick up. Now, there's been a bit of a an uncertain move this morning, a bit choppy in terms of how the market has moved around today. But I think what you'd be looking at on this hourly chart is that this recovery is still in play. Now, you'd be looking at how the market now responds, because on the daily chart it's interesting that if you take a step back, you can see the Fibonacci retracements of this big sell-off have often, certainly the support lines, have often been very, very adhered to. So you've got the June level of 23.6% fib, and that coincided with the low this month. We've also seen previous months, March, April, and May. So it's all considering that the fact that this Fibonacci retracement of 50% around, of 38.2% fib around 95 figure could well be an interesting gauge as the market has just dropped back initially today. I think setting up for a possible dollar recovery towards that 50% fib line. We've had a strong move from 23.6 and holding above 38.2%, opens 50% fib at 96 figure just above. And you can see that on the hourly chart as well, that if you can get through the resistance that we've seen, 95.40, 95.50 area, if you can get through that, you really are opening for a recovery. So it's an important level of support around where we see the market trading at the moment, especially with the more positive setup we've got on hourly momentum now. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, go to our website to sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.